Right, we return with Mr. Corvin Codirla, founding partner of CCFX, a hedge fund manager whose main mission in life is to allow or help others to trade like a hedge fund manager. Is that correct, Corvin?
Indeed, that's correct. So branching out into education and approaching it from a slightly different angle. Not so much from a chartist or a technical position, but more creating a framework of thought where people can understand the basic building blocks and put them together. There's an interesting quote in the Market Wizards by Jack Schwager, which of course is the classic and needs to be reread 100 times, where Ed Sekoda says, the markets are the same as they were 10 years ago. Why? Because they're changing in the same way as they did 10 years ago. And the book was written in '87. Now, almost 30 years later, the same adage still holds. And the ability to adapt, in the end, is what makes a successful trader that has longevity.
All right, just sorry to interrupt. That actually reminds me of something which is very pertinent for people who are trading the markets, probably people watching the program at the moment. You don't want to stand aside. You know, you're there trading the markets. You know, you've got up at 6 in the morning to see where the Dow is and the DAX is and dollar yen, et cetera, et cetera. You can't spend a day waiting for the things to settle down or see whether there's another fall on, the market. Basically, the main problem I see and have seen as a broker as well, people have to have a trade on.
What people think they have to have compared to what they need to have are two separate things.
They can't leave it alone. I mean, they just have to have a position in the market. I mean, you probably experienced it yourself. You can't be sitting on cash. Is just not, or sitting with an account which is not trading. It's just not an option for most people.
That is a psychological attitude. I'll give you a very good example of one of the best FX prop traders I've met, who live to date P&L professionally is actually positive. And his attitude was very much, let me just trade those moments that are suitable for me. I mean, this guy was trading in size, several yards, but he was capable of sitting at his desk for months on end until the right opportunity came along. And therefore, we must distinguish between the habitual need to gamble, which everybody has,
we love that.
versus take it as it comes. So wait for the right setup. The one thing to remember is the markets will always be there. They'll be there. They were there before you were born. They'll be there after you die. Opportunities are always going to come along. And there's some psychological disturbance here in terms of people think this is the only opportunity that'll ever set up for me.
So I mean, I think that's a point that is hardly ever talked about. That sort of, to buy, sell, or don't do anything. And don't do anything is actually the most difficult thing to do and the best thing to do. And knowing when to do that is the best thing to do. For instance, the FTSE, sell above 7,000, buy below 6,000. If you just did that,
yes,
at the moment that would be it would have been and would be still probably a very successful strategy. Or with the stock market, buy at the end of November, sell in May, and actually and then from May to November either be short or go on holiday.
And buy back in September, October.
Exactly. But nobody can do that for some reason.
It's very difficult. And of course, that reminds you of a quote from Reminiscences of a Stock Operator, where Jesse Livermore says the best thing he's ever done was to learn how to sit on his hands. And of course, the range.
I haven't read the book, unfortunately.
And it's even more difficult if you're like an institutional investor, where you have in your in the fund plan absolute caps on how much cash or cash-like investments you can actually. So you have to be, for practical purposes, you have to stay fully invested, even if the market's going down and there's nowhere to hide.
Of course, because then investors come to you and say, well, you haven't had any P&L movement for a month. What's going on? And it's very difficult for you to say that I'm waiting for the right opportunity, because of course in their minds, going back to the psychological attitude, they believe an opportunity is there every day that you need to exploit.
So everybody's geared to over trading, basically.
Yes.
I mean,
yes.
from the institutions to the ordinary guy at home, trading on his spread bet account.
Well, all you have to see is the ads on TV from FX Pro to IG Index. I mean, the focus there is on how you can open up this mobile phone to create a real live trading room, and how you have to be constantly engaged, rather than telling you, leave it alone for a month or so.
That would be painful for you.
It would be.
No, well, the other thing is actually, there are other companies where they're actually, there's an incentive to, you trade more than X amount of times a month. And you get a rebate, or you get money, you get this, or you get a free iWatch, or whatever you get. There is that aspect as well, just to trade.
It's interesting in terms of not trading, of course, or not having a position on. It's all about the pain of missing out on an opportunity, and most people live in terms of regret. And even more difficult one is if you have a winning position. I mean, a classic example is the dollar runaway in emerging markets. Yeah. You're sitting on this dollar Brazil thing, and it's going up and up and up, and all you can think of is, I need to buy that car, pay the mortgage, I need to take it off. And of course, had you taken it off too early, you just leave all the money on the table.
But isn't it painful? I mean, you say there was a great opportunity to be short of the FTSE over the last couple of weeks, and you were like sitting there just, staring out the window, waiting for what you thought was a better opportunity to go short, or waiting for the market to hit the bottom. I mean, that is quite painful. That is a painful experience.
It is, but then you have to ask yourself, do you live to trade or trade to live? There must be other things in life that you can do, and one of the best things to do in a situation like that is to go off and do more research to get a better understanding of the market. It's not, I mean, let's face it, if the only thing you can do during your day is sit in front of the screen and push the buy and sell button, then you have more serious issues in life than making money.
Don't say that. It's all you need. But so basically, I mean, what's your ideal time frame of trading and being active in the market? Is there any sort of is there a piece of string type of message there? You're trading once a week, 2 times a week. You've got positions on for 2-3 days. What's the ideal time frame?
You need to adapt to your own personality, and certainly different time frames require different skill sets. But for a person who is beginning to intermediary trader, probably the daily, maybe even the 4-hourly time period to then weekly holding periods is suitable. Why? Because as we said, you give the markets time to work out the information, and it allows you to then, on the back of, particularly with regards to currencies, understand what the bigger picture flow is, what the currency basket should look like, and then tactically trade around that. Anything smaller than that, if you trade 5-minutely or 50-minutely bars, I mean, just imagine the S&P. The S&P moves, 20 ticks a day, up and down, 20 points a day. What's the bid ask that you can get realistically as a retail guy? Maybe 1 point on average. I mean, that's already 5%, a hurdle in terms of cost you have to overcome if you day trade. It's a very difficult challenge, and it's a very big edge that you must have. And unless you have the order book in front of you and you know where the client flows, it's very difficult to overcome.
Corvin Codirla, founding partner at CCFX, thanks for coming in today.
Thank you very much.
We'll be back after the break.